Hello everyone. Listen, I wanted to address a very good question that was asked to me early on this week. This one's by Al Cola. Al Cola, this video is dedicated to you. They're saying that they have $6,000 on this credit card, right? $1,800 here that they can pay. And their payments, right, is $973.60 on their mortgage, and they wanted to double up the payments on their mortgage. And they're concerned because if they double up their payments on the mortgage, that credit utilization, they said, is gonna hurt the credit score. And so they're wondering what to do. And so, you know, there's a variety of things that you can do. Remember that credit scores, they go down, they go up, they go down again, they go up. The most important thing that we want to realize is that credit scores are nothing to be afraid of. Okay? The FCRA and different organizations have made it great for us as consumers, right, many times to dispute and then to get this corrected at the credit bureaus, any inaccuracies that they may report. So don't be afraid of the credit scores. Now, to address your question, should I double pay on the mortgage? Well, it depends, right? It depends because it's all about accomplishing your vision. What's your vision? Do you want to pay off the mortgage early? Is that where you want to allocate your monthly expenses, right? Or do you have another place where you can put that extra $973.60 a month? It's all depending upon you. Now you remember we went over the chunking method. You remember what the chunking method is, right? So let's say you have $200,000 as your loan, right? You want to chunk that, right, with the $10,000. You want to chunk that with the $5,000, however much. You want to chunk that, right, and then you'll pay your line of credit. You're chunking it with your line of credit, okay? You're writing the check from your line of credit. You're placing it to that big principal, right, the mortgage principal. Why? Because the interest that you're paying is feeding off of the principal. Absolutely. And so that's why we want to chunk, right? And then pay the line of credit back until it fills up, and then chunk again, and then pay the line of credit up till it fills up, then chunk once more. All right? And again and again. Now, if you would like, you can pay double. However, I believe there are more ways that you can actually utilize that extra over $900. You know what I mean? Because you're already chunking that mortgage principal. You're taking a huge chunk out of that mortgage principal, and you are paying it down really, really fast. Okay? And while we're on the topic of mortgages, right? Folks, if you want to prioritize your loans, and if your vision isn't to pay off your mortgage in 5 to 7 years, you don't have to. Because in reality, your mortgage is most likely something that you wouldn't have to really worry about paying off. Wait a minute, CJ, what? You got to explain that. Absolutely. I'll be glad to. It's all about cash flow index. Cash flow index. Gary Gunderson knows what I'm talking about, all right? Over there at Wealth Factory, big shout out to him, all right? For letting us know, right? Putting the Velocity channel in the know about the cash flow index. What the cash flow index is, it's actually a way you can prioritize the payoff of your loans. Absolutely. You see, when you are looking at your loans and you're wondering which ones to pay off, you don't necessarily have to look at the interest rate. Just look at how much cash flow is getting sucked out of your wallet. And this is the formula that you will use to ensure, right, to ensure that less cash flow is coming out, all right? This is what we want you to do. We want you to look at this formula here and then utilize it, all right? Cash flow index. You take the loan balance. You divide it by the minimum monthly payment. And then you will get a number. Okay? Let me say that one more time. You will take the loan balance. How much do you owe? Right? That's all it is. Divide that by the minimum monthly payment. How much do you have to pay each month? Right? Minimum monthly payment. You divide that, that answer is going to give you a number. Okay? Now, if that number is between 0 and 50, that's what you call a danger zone loan. Danger zone loan. All right? And we want to make sure that we are paying those off as fast as possible. All right? If the number is between 51 and 99, between 51 and 99, it's a little better, okay? But you're still going to need to either restructure the loan, refinance. It's amazing what communication can do, right? So go ahead and talk with your lenders, talk with your bank, and say, listen, can we work something out? Can we refinance? Can we restructure? My friend was telling me the other day, man, we had to talk to the bank and see if we could find some common ground somewhere, okay? And you can do that when it's over here in the caution zone. So that's 51 to 99. If you have your loan balance, you've divided it by the minimum monthly payment, and you come up with a number that's 100 and above, well, that's what I call the green zone. That's the freedom zone. Okay? You're in the freedom zone. And you don't have to worry about that. So, I mean, there you have it. Sure, you can pay an extra $900, $1,000, $1,200, $3,000 on the loan to pay it off. However, if you put it through this formula, you may find that that money is better allocated somewhere else, like to a vacation or something. Don't you deserve it? Yes, you do. Listen, if you love this video, go ahead and like and subscribe and share it infinity times. You guys got to keep these questions coming. You keep on asking great questions. There are people that are out there that need to know this stuff, and you're asking the questions and getting them the answers. All right? Listen, folks, thank you so much for watching. God bless and have a good night.